Okay, good morning everyone. Hopefully my audio sounds okay. Seems like it's a little bit off. You guys let me know how that audio sounds. Give me a thumbs up. How's that audio for everyone? Can everyone hear me okay? Sorry guys, I was messing with some stuff this morning trying to create some graphics for the channel and just want to make sure okay. Sounds like the audio is good, so we will get into it. So hopefully everyone's having a good weekend. We're going to start off with triple Qs, and I'm going to go through the what you guys want. You know, this live stream's about subscriber stock picks. So typically, you know, I'm kind of looking throughout the week at the things I'm interested in and the charts and trade ideas that really look like good setups. I can't find them all. I don't see them all. And so, you know, it's always helpful if you guys want me to look at anything you're interested in, then that's what we do in these live streams. So I'm just going to jump right into it, guys. And for anybody that's new, just follow along. You know, I'm going to go through, you know, the trade setups and charts. Hopefully we find some good ones. I found one that I think is pretty good. I was going to put out a video on Friday afternoon just pointing this out, but I just didn't have enough to really go through to warrant a full video. So I'll go through that and point out that trade idea. I'm not sure if I covered it Friday morning, but I will point it out in this live stream as a good trade setup. I took the trade on Friday, so and besides that, we'll just go through the subscriber stock picks. So real quick, brief coverage of the broad markets. All right, so Monday, there's one potential thing I'm watching on triple Qs. This is the hourly chart here. We gapped down Monday. The only support I really had was at this 294 area. We can get rid of that one. We had some reactions along 294 in the hourly chart, and that's really the last support that I could find that really made any sense, and pretty weak close. If you guys notice the close on Friday, they just sold that thing down, and we pretty much closed at the lows. So, in general, just a very weak day on Friday. Weak price action, so it's bearish. In general, we just have to read that as bearish. I went home into the weekend short. So just to give you guys a quick recap, I took a long here at triple Qs on Thursday at the close. We closed at this support level, filling this gap. But Friday, with the report, the inflation report, they gapped it down. I gave it just a little bit. You know, I really just gave it about 10 or 15 minutes, 20 minutes or so Friday morning. I really wanted to see how this 294, because I had that as another level of support, so I wanted to see if we could hold there, and everything looked weak, so I basically just exited. I only had a triple Q short at that point in time, but I pretty much just exited my that position and flipped short. So I reversed short, was able to kind of dig my way out of a hole with how I opened, because obviously this gap down here we opened down, and I was, you know, open the day negative, but being able to flip short, I was able to recuperate most of that. And then also gold and the gold stocks. You'll see these gold stocks. I always have these things up on my trading platform, I noticed they were starting to bid those gold miners. It just looked pretty impulsive, like the money was just really flowing in. So I added to some positions there, as well as positions I already had. And so those, given all the rallying in the gold stocks, as well as being flipping short, I was able to dig my way out of the hole. Just to give you an example, I woke up, I was down about 3K, nothing huge, but down about 3K, and I was able to dig my way out of the hole and close the day up 3K. So, feel good about that. And that's how that ended up. So the chart, I didn't see anything bullish basically with how we closed. So I just went home short. Looking at the daily, potential of a back test of this downtrend line here. Okay, we could see that. Looks like we'll probably, if we're gonna hit that, maybe you come in with the recent lows right here at about 285. So watch for that. I don't know if it's gonna hold, or if we're gonna back test and bounce off of that. It's really hard to say. So we'll just have to evaluate what the price action looks like into next week. All right. 318 was my price target. We got close, and that is that is kind of how a bear market rally would play out. When everyone's watching a key level, you never get there half the time. You're either going to not get there or you'll overshoot it. Very, very seldom do you get there perfectly, but anyways, we got close. We got about 314.50, and then the seller stepped in. So maybe that's it. We'll have to see next week. Again, the last area that I'd be looking for is maybe a back test right here, And we have the Federal Reserve coming out on Wednesday. So I suspect the market, usually what happens is the market goes into a holding pattern where nothing really happens. It just chops around for a few days up into the Fed. And then we'll see where the market wants to go after the Fed. This market, I don't know. We could sell off into the Fed and then rally after the Fed. It just really depends on how the Fed comes out. The inflation reading's hot, so it's really forcing the Fed to continue to raise. So they might just continue to talk hawkish and raise. I'm under the impression that the Fed wants to walk the market lower. I've talked about that in the past, how I think the Fed wants the market to correct without raising interest rates too much. The reality is they can't really raise interest rates that high, but they want this inflation to come down. They want they really want this hot inflation to come down. And so one of the ways they want to maybe manage this is get the markets to sell off pretty impulsively by talking a big tough game about raising interest rates, and continue to hike interest rates, but they're incrementally hiking them. So they're not really going that high with the actual interest rates, but talking really tough could bring the markets down, which could cause the inflation readings to start to ease off a little bit and come down a little bit. And that's really their perfect scenario, is like bring inflation down a little bit without hiking interest rates that much. And so in general, that's what I think they're going to continue to try to do. And the markets will probably play ball. So looking at triple Qs, we still have the pre-COVID highs right here, 238.70. That's where I think the Fed is really targeting. If the Fed they pumped crazy amounts of stimulus back in 2020, pretty much all through here. They were pumping the market with crazy amounts of stimulus. They've now broke the inflation, sprung the inflation trap. And I think they're trying to withdraw some of that stimulus, or at least get it to come out of the markets a little bit. And maybe right down here would be a target before the Fed starts to ease off on their hawkishness. All right, so that's what I got on triple Qs. SPY's kind of the same. We could look at IWM, and then I'll get into your guys' picks. IWM, again, there's your downtrend line. All right, I've got it marked out. All right, this is your all-time highs in IWM. You got the downtrend line, and sure enough, they stepped in early and sold it down. So we're in a downtrend. Just that's it. You know, we're going to continue to say sell the rip, and yeah, we'll just look to continue to sell stocks. Here's the trade idea I want to point out. PANW. Okay, so this one is the reason why I like this one, and I kind of pointed out. Here's your daily chart, and you've got basically your upward trend. All right, this is going back to 2020, and as we zoom in, we had negative divergence. This is a trade I pointed out a while ago, but here's your sell signal. All right, so that was a sell signal that came on May 5th. All right, we sold down. I had some support levels, but big support level right there at 421.26. You can see we had this huge gap right back here on August timeframe of 2021, and so usually when you have a gap, the two most important levels is gap entry and gap fill. All right, so you mark those out. So that's gap entry right there. It pretty much hit gap entry to the penny, and then we got a nice impulsive rally. Where did we rally to? Well, we rallied up to the 200-day moving average. See it right there? Struggled with that for, a week and a half, 2 weeks. And that's it. If you're in a bear market, you're usually not going to recover that 200-day moving average. It's an objective area where where the rally would end. And sure enough, I think that's what started now. So I took a short on the breakdown on Friday from this bear flag. All right. So that's the other thing about this one. You got this flag pull. You could maybe mark it here. This is really where the flag played out. And then what I did is I just dragged this line at the point of the breakdown. You just drag it right there. You don't take it all the way at the breakdown point, right? You don't go like that. You take it at the flag. Where does the chart break out of the flag, whether it's down or up? Right there. And then that, to me, there's your target. See that? See how that works out? And see the target is 374.86 roughly. It aligns very nicely with that gap fill, and that's where I think we're heading. So I took a short on Friday looking for this to move down to this gap fill on this next move lower. It's not going to collapse and do it all at once, but I think we'll work our way down there. And it should be the thing about a bear flag. Usually you want to see it pretty impulsively break down, almost as impulsive as it was on the first leg lower. So this could just, pretty much flush down there with maybe a day or two rally here. It might rally a day or two on the way down there, but for the most part, probably pretty impulsive sell off. And from where we're at right now, that is a drop of about 25%. All right, so that's the target now on that one. The near-term target is gap fill. Okay, so that is one of my better trade ideas that I have. That one just looks really great. And then these are kind of interesting too. They're not quite there, but oil stocks, I've kind of pointed these out. They're, we'll watch. They're starting to set up maybe for a sell signal. Here's XOP. I took a starter short on this one. We'll see. I'm a little gun shy on the oil stocks because they've been so strong. But again, it's a crowded trade. So when the selling shows up, it should be pretty impulsive. So I will look to, see if we can't get this thing to sell down to this trend line right here. That's kind of the target. And that's coming off the October, let me move this thing, October 2020 timeframe. Okay, that's when oil stocks really started to rally. So we got support. I would think we go down there. All right, guys, I'm going to start at the top, and I will just work my way down, and I'll try to get to everybody. I can't always get to, every single one. Please try to keep your stock picks to just one or two, and we'll get into it. Tilray. All right, this is a pot stock. I had a potential bullish falling wedge, but we've kind of broken and violated this wedge part here. So now we almost have to take it. Here's what I'll do. This one is probably right about here. And yeah, it's so like that. So I got a downward channel on this one. We are coming into support, it looks like. Or what should be support. So I would just look for, probably a little more downside, about 311. But the thing is, we might take out that divergence. There's mild bullish divergence here, but it's not confirmed. So if we keep going lower, we might take it out. You could say that maybe there's divergence from back here. and there is. So yeah, that would maybe be an objective area to go long, would be down at this trend line. Not my favorite. I'm not a huge fan of penny stocks and kind of junk stocks. If I do take them, I taper down my position size. So that's kind of key. Risk mitigation is one of the risk management is one of the huge. It's just a really big component to trading, and managing emotions, managing position size, not seeing a profit and just bail it and taking your money as soon as you see a profit. You're really just sticking with the trade, whether it's going against you or for you, as long as the technicals are working. And if you can't do that, just a kind of a lesson that I've learned through the years, if you're in a trade and let's say it's technically still sound in terms of a trade idea, but you just can't stand the losses that you're taking on, you're too heavy in the trade. You've taken on too large of a position size. And so you emotionally won't be able to handle the losses if your size is too large, and it just causes you to bail. So what you want to do is taper down your size so that you can stick with the trade as long as it's technically still sound. All right, that's kind of key. You'll find out that you'll be more profitable, more consistent, and more accurate if you have a position size that allows you to stay in a trade that is technically still working. All right. I'm not going to go through some of these penny stocks, guys. Hut. Yeah, I don't know. Well, let me just. I think I've covered this one in the past. I think there's my target, 65 cents. There's nothing else that I see there, so that nothing's changed. Or it's not. It doesn't have to be 65 cents. It's just this trend line. All right, this thing's going to collapse. It's already pretty much collapsing. Gold looks good. Gold's looking very good. Someone asking about gold. I can just look at these miners. This one, HMY, I added to this position on Friday. Big bullish engulfing candle right there. Engulfed the previous 1, 2, 3 days. Doesn't mean it's, we want to look for follow through. So bullish engulfing is a potential reversal candlestick, but you need to see confirmation. So you want to see a follow through candle. Another green candle would be preferred. It can either green or just kind of holding this area is okay. As long as it holds in this area, it doesn't have to be the following day, which coming into the Fed, we don't know how that's going to play out. Maybe it just kind of idles right here for the next 2 days. And then maybe come Wednesday, you get the big green candle. That's okay too. Just as long as you really don't start to sell down and close back down, that would not be a confirming candle. So across the board, we had all bullish engulfing candles pretty much in most of these charts that I found. They were all up pretty good. And it's not so much the fact that they're up. there's over the last few months or month or so, they're still not really up. It's just the reversal candle and how Friday really's price action indicates that likely we've seen a bottom. We don't have to, but need that confirmation. Okay, and just scanning through XOM. I think XOM broke. I think there was a sell signal. Let's look. This is ExxonMobil, so it's a big oil stock. What this stock does is where the oil sector is going to go. This is the hourly chart. See, you broke this hourly chart here. It's just not that impulsive. It's okay. You could take a short on this thing. I wouldn't want to see it recover this trend line. But you could short it for a move down. Looking at the daily, you've got negative divergence. The oil sector pretty much has negative divergence. I've seen it across a lot of different stocks and sectors. So there's your negative divergence. And where would I trade this thing to? Probably this trend line here. So maybe a move down. Remember, oil is in a bull market. Commodities in general are in a bull market, but I think they're probably due for a nice long correction. So maybe a 20% drop in some of these things over a period of like a year. Kind of like what gold went through. So again, you could short it. That's down to that trend line's about an 8% drop. You'd want to wait for a break of that trend line to get much more, and then I'd probably look at the 200-day, and we'll look for some support lines. But that's all I have on oil, really. You could come in for a full backtest of this downtrend line. That would be the very objective area to buy oil stocks. So this is going back to 2018, and you can see all the tags of that resistance line. If for some reason you had a big solid correction, you came like that I would be buying oil stocks for sure right down there. But it's hard to say. So that's kind of the levels to watch as it breaks down. All right, guys, I'm just kind of scanning through here. I will try to get to all your stocks, but I can't cover multiple stocks from the same person, so I do have to skip a couple of those. All right, DKS. Is that a retailer? Oh, yeah. I was thinking this is who it is. So I've analyzed this in the past. Probably going lower. Here's what we got on this one. So I have a level down here at 50. It's about 51. Yeah, that would be my target right now for DKS, 51. That's your pre-COVID high, that's your pre-COVID highs area, and this is your COVID drop. So that would be my target. You can see we came down, rallied. This looks like a bear market rally. Ran up, basically filled the gap right here. Okay, your gap was all the way up at 87.31. And you pretty much filled it, and it looks like this thing's starting to roll over again. So I would look for that level right there as the next target, 51. I don't see anything else telling me that it's not heading lower down to there. So we could crash right down there. One thing, guys, just to point it out, on that last leg lower in the triple Qs and the indices, when we got that leg lower, that if you guys remember on like triple Qs, I had been calling for what level was it? That I think it was about 282, I think, or something like that. Right about there, 282, 280-ish. That was a big level I'd been looking for on triple Qs for quite a while. And we got it. We got that level. We never saw the VIX really spike on this leg lower here. We never really saw the VIX pop and spike. So that tells me that there wasn't really like capitulation or capitulation selling, like throw in the towel selling, just, I'm done with it, sell everything, that kind of selling, panic selling basically. We never really saw that. So that is possible. We might get that this time. This, if we're going to, like, here's DKS, if we sell down here, maybe it's going to be pretty quick and you're going to get that big kind of panic sell move. And that might signal a longer term bottom. Just possible, or just hypothetical. All right, guys, I am just rolling through. Okay, let me get to some of these super chats, guys, because I do like to, you guys show appreciation to me. I'll show appreciation to you. So I do appreciate that. All right, so vascular surgery wants me to look at NOC. Oh, not MOC, NOC. All right, this is a defensive play. This is like they make weapons and stuff. They make all kinds of stuff, but they make it's a government contractor basically. Yeah, so. The war thing on this, because this person's saying that the macro looks good because of the war, that should be all priced in to this. All right, that's all priced in. Everybody knows that's going on. Any positions that have been needed to be taken based on that have been taken, and it should be reflected in the charts. So looking at this one. Negative divergence in the, that's a big negative divergence. I mean, it's not big, but it's just very distinct. It's very, it's easy to pick out. All right, so this was a divergent high right there. You see that? There's your former high. There's your divergent high. Breakouts to new highs that occur with negative divergence have a high probability of failing, and so far that has been the case. It has failed. All right, so you made a slightly new high and then you sold off, 8%? Right now, down about 6%. But I don't see any kind of trend lines that have been broken. So I would, short term, this is probably the trend line I'd really watch, is something like, right about there, I guess. And you can say that it's basically putting in a bearish rising wedge. The wedge hasn't been fully defined yet, so maybe you're going to make another run up, and really get to the apex here. But I would probably look at that as a potential bearish rising wedge. And you got the negative divergence. So that's short-term stuff. Bigger picture, you've got probably something down in this range down here. It's not super distinct because we have a couple violations down there. But that's about as good as I can make it. So you've got that. So maybe if you're going to break this, you could head down and, hit that lower trend line. And yeah, so that, all right, here's what I think is going to happen. Now that I see this, I'm just going to give you my read on it. This is a big bearish rising wedge pattern that was started back in 2018. So a huge bearish rising wedge. This looks like Walmart to me. Okay, and I'll show you the Walmart chart real quick. But this is a big bearish rising wedge pattern. We broke to the upside up here, but and we've started to put in negative divergence up here. So I think we're going to fail this price action, and I think at a minimum we're going to head down to the bottom of the this bearish rising wedge pattern. Again, it's not my favorite lower trend line just because of the violations, so maybe play around with that. But the top one looks pretty good, and if we break down, you're going to probably break the 200, and then you should head down lower. So to me, this sets us up for, a decent size move down. Let me show you Walmart, and I'll show you why. see, here's Walmart. This is a big bearish rising wedge pattern going back to 2015. All right, see the big bearish rising wedge, and then we pop above the wedge here. And up there, as we started to break, we put in negative, the negative, sorry, wrong tool, guys. The negative divergence kind of showed up right about there in the PPO, and the RSI was right about there as well. And, you're up here, and then boom, gap down and just smash it, so that's what it looks like, but you don't know if this is going to come or when, if you're going to get a gap down or if it's just going to break down. You don't quite know, so that's what I got on that one. Mr. Bear, yep, I'm glad you like that Zen one. Hey, thanks for the super chat, guys. So here's Zen. This I didn't cover it because in the Friday's video, but if you're in it, and I talked about this weeks in advance, so if you're in it, you obviously made a ton of money on it. I did as well. But Zen, here's Zen. So on Zen, you had a trend line here, all right, to watch. So you got support. There's another tag of it. We put in negative divergence up here. Where did we put it in? Well, we had it right here. I've got it marked there. We got the sell signal. For me, the sell signal came right there on May 24th. That was the sell signal. And then you basically, what you did is you ran up for a back test. And then from there, that's all she wrote. She failed. And, if you took the trade, even at the end of the day on the sell signal, the thing was profitable in a matter of about 2 weeks by, 30% or so. So that's pretty solid of a trade, 30% in 2 weeks. This is how the downside works typically. So I love shorting because as a trader, as a technical trader, you can usually find shorting can be difficult, but the thing is that if you're using the technicals, it's really not that difficult. You just have to be accurate with your entry. And that's what I teach in my course. My course is all about finding setups and targeting the entry. That's really what this course is all about. And this is my kind of trading thing. Once you get down here, it gets trickier. At least from my trading strategy, it gets trickier to call every single little zig and zag where you get this and okay, I think maybe this, and then that gets trickier. But to call this move is what my trading strategy is set up to do, at least with the highest degree of accuracy that I can find. So Zen is near potential support, but it's really not my favorite support. It's just, for me, this is kind of minor support. I like this one right down here at 51. But I don't think you're going to just plunge right down there. You could, and if you do, I would cover down there. But, otherwise it's probably sell the rip until you get down there. So maybe you rally like that and then head lower. 51, that would be my final target for right now on Zen. All right, Steve, moving through these super chats. All right, Costco and Target. All right, so Costco should continue to sell down. I've covered that one for a while. My targets are down here on Costco. See this trend line? So as I roll out on Costco, you could go to the weekly chart. Guys, if you can't mimic my charts, log scaling, okay? On TradingView, it's right down here in the corner, log scaling. Very critical for long-term charting. This is what the pros use, all right? They're not using linear scaling. You can't chart linear scaling over a longer period of time. In short time frames, linear and log are about the same, but longer time frames, the daily chart, weekly, all that, you need log scaling. And so this is your bull market going back to 2009 on the weekly chart in Costco. You can see support. Not quite, but close enough. There's support. There's COVID, or maybe that's COVID. No, that's not. That's the December 2018 PAL pivot thing. And that's it. That's the last tag of it. So we have 3 distinct tags, multiple week clusters. It's a valid trend line. So that's where I think we go. Here's your pre-COVID highs. So you might get a bear rally. It might look something like this. Maybe we're heading down here right now in the next few weeks, or relatively quickly. Maybe you bounce here like that, get a bear rally, fail, and come down to the trend line. So I don't know when we're going to hit the trend line. So I don't know what level it'll be at, but I do suspect we're coming down to that trend line. Again, even if you hit that trend line, Costco's still in a bull market. All right. So until I see a definitive break of that trend line, that would be a buying zone for me with Costco. But again, on the weekly chart, look at the negative divergence that was in play. All right. And so this high way up here was a divergent high. All right. So that tells me that down we go. All right. Continued downside. That's Costco. Pre-COVID highs will likely be an area of support. You can see it's a clear area of resistance back here and here on the weekly. So it should be an area of support as well. And that would be right down there at about 388.50. All right. And then, Steve, you wanted TGT target. So there's your bull market in Target going back to 2009. And, you're probably going to have a zone of support right there. But let me go to the daily. So big gap down, that's your trap. All right, this is your bull trap. So anybody who's in this thing long, pretty much all of this actually, even down here. Anybody who's in this long, and this is over a couple of years basically of trading action. So all the longs have been trapped. They're at this point, you just think about the mentality of the longs. They just want to get their money back. These people, if you're down here, you're, whatever, maybe you're still long and you're fine. But all of these people for the last 2 years or so, they just want to get their money back. So they are now a wall of sellers. Most of them. Some will hold, but a lot of them will just be a wall of sellers. So as, if you were, that's why it becomes sell the rip. Because for one, shorts smell blood and they look to sell the rip. They look to find key levels to short into. And then the longs who have been trapped are the bag holders. They just want their money back. So basically, as if you were going to rally and they start to get their money back, they just, close enough, I'm selling, So it creates this wall of distribution sellers overhead. And that's why it becomes sell the rip when you get big bear traps like that. So there's a gap to fill right here on target, 139. You're probably going to get a reaction there. You'll probably fill the gap and then bounce. But I think there's another level right down here to look at. That's a nice level right down there. I like that level. For me, that's probably... that would probably be the final, so maybe we fill the gap, you bounce, you kind of work your way like that, and you get down there at about 90.38, $90, we'll call it. Don't wait for the exact penny either. If I point out a level, don't wait for it to, that exact penny. You always want to step in early, whether you're shorting or going long. Anytime you're getting close to a level, you want to step in early. That's how I always do it. So that's where target's likely going, and if it does that, it will still be in a bull market. Okay. Microsoft. So on the weekly chart from Microsoft, let me get rid of this my annotation here. All right, so there's your bull market in Microsoft coming off the 2009 lows. That's my target. That's where I think Microsoft's going, guys. I mean, it doesn't have to because you've got this other trend line that was established. But I really think we're heading down to this longer term bull market trend line down here. And that's why I've got it kind of marked out. So this is a weekly chart. It's going to take some time. Might take a year. I don't know how long it'll take, but that would be my target for right now on Microsoft. Looking at the daily. Oh, and the other thing, look at the weekly. When I point out weekly charts and negative divergences and stuff, these usually take years to play out on the weekly chart. So, but it tells me that this downside is going to continue to play out. When I look at the daily, you've got this trend line here that was established with these tags, and we're getting kind of close. All right, so as I zoom in, you've got another 4% to hit that trend line. So watch that. All right, that's going to be. I think you will hit that trend line. You're so close. I think it's pretty obvious we will hit that trend line, and then we'll probably get a bounce off of it. I would think. All right, but so maybe like this. Hit the trend line, bounce, where, I don't know, maybe back up to this area, because this was former support. This is where we bounced before, so maybe that'll be resistance. So something like this. You break down, hit the trend line, bounce, chop around for a little bit, a couple weeks maybe, then you break. Watch for that, though. If you don't break, fine. But if you break, you're probably heading a lot lower, all right? And this would make a lot of sense to me because if it drops from, let's say it from the high down to the low, that's about a 60% drop-ish down to that level. Well, you roll back and look at Microsoft and some of these drops, like here's a drop right here. That was a drop of 26%. 18%. Yeah, you wouldn't have a drop that big in Microsoft, so definitely a big drop if you get it. But again, Microsoft was bid way high, so. All right, that's what I got on that one. Okay, guys, scrolling back up to the top. I just want to, Brad P, Nug. Okay, I like Nug, and I was talking with a friend about it on Friday. But here's the thing, Nug is a leveraged play. This is a 2 times leveraged gold mining play. So it will, in theory, perform twice as good as like GDX. However, it does actually do better if you catch it trending. So let's say gold miners are going to rally from here. Then this should actually do better than 2 times. It'll probably do about 2.5 times better than GDX. The leverage actually works in your favor if you catch it trending. If it just chops sideways, so you don't want to own NUG when it's doing this. All right, you do want to own NUG when it's doing this, or even that if you want to short it. So you want to own these things when they're trending, but when they're going sideways, you don't want to own them. So if we're about to trend to the upside, then you should do well. For charting perspective, I would just use GDX. Okay, that would be how I would chart that and look for resistance levels on GDX. Looking at GDX here, I got a lot of markup going on. You got the big COVID drop here. For me, we got to get above the 200. We need to see that confirmation candle, big bearish or bullish engulfing candle. Higher lows, we're making higher lows here. We just started put in a higher low. With that bullish engulfing candle, you get confirming price action and break above the most recent high, about 33.52. That should set us up for a move up to, probably up here at 41.50. All right. So watch for that. And I'm on the belief that gold is starting the next bull leg rally. And look at GLD. This is another way to chart it. GLD, this is just kind of the gold ETF. But look, this is 2018. Here's your bull market in gold. All right. And we put in this big triangle pattern here, right there. Broke to the upside, came in for a back test, and so far bounced off of that. And we've been holding big bullish engulfing candle, so that might be all she wrote. We might start that upward, that next leg higher in gold and the gold miners in an ongoing bull market. So what I'd be looking for is something like, well, I mean, who knows? It could be something like this. It could be just something like that. It's hard to say, but I think we're going to break above the all-time highs or these highs right here. We've hit it twice and actually probably 3 times if I roll back. Well, no. See, here was your former high back in 2011. We popped above it twice. If we get it back up in this area, I think we're going to break out and break above it. Of course, we don't want to see negative divergence if we break above it. So that's what I got there on that one. All right. Back up to your guys' stock picks. Guys, drop me a thumbs up if you're finding value. We got about 140 people, 64 likes. If you haven't hit that like button, I do appreciate that. It helps the channel. I don't know how much it helps the channel, but that's what all the YouTubers say it does, is help the channel. So Carvana. All right, let's see. Carvana, guys. Okay, well, here's what I have on Carvana. Bullish falling wedge. We broke to the downside. This could be a stop rate fake out move. For me, this is how I would look at this thing, because there could be a trade here, and it might be a pretty strong impulsive trade. I don't see it yet, but here's what I'd look for. One, you have bullish divergence, okay, on the RSI, and then if I look at the PPO, it's there as well. All right, just barely there on the PPO, but it is there. And so you have it. The other thing to look for, what I would probably look for now, you go to the hourly chart, is I would probably wait for a break of the top side of this wedge, because again, the wedge isn't even that well defined. Maybe it starts here. Yeah, that's a little better, right about there. I would wait for a breakout above the top side of the wedge here. If you get that, that's going to be that would be a buy signal to me. And we'd probably go something like this. Your major target would be like, I don't know, like that. So maybe somewhere right in there. Yeah, I don't know. Somewhere right in there, 44-ish, or, the major target puts us at about 38. But that could be a good move. Let's say you get the breakout. That would be a 50% rally right there. I wouldn't look for much more on that one. Okay, that's Carvana. Hey, thanks, Tom. Yeah, he says my calls are about 70% right. Well, that's about as good as you can get. I mean, that, again, if I'm 70% right most of the time, we're all going to make money, guys. That's as long as you manage your risk, all right? As long as we're taking position sizing right, or not, you're not loading the boat on one trade, and that one trade's the one I get wrong. I'm not going to get every trade right. It's just impossible for me to do that. So if I can stay, 70% accurate, and we're managing risk, we will be profitable by the end of the year. I'm already wildly profitable for this year, and if you've been following me this year and you haven't been giving it up on the trades that I've been getting wrong, then and you're managing your losses, then we're doing okay. Yep, FOMC next week. Upstart. Okay, so is that an iBuyer? I forget if that's the iBuyer. No, they're not. I know there was an iBuyer in real estate. Not a lot of history here, so kind of difficult for me to really track this, but this is one of those ones that could go bankrupt. We don't know. It was just started back in 2020. There's stocks that came public in 2020 and 2021, and they had no earnings and not profitable and losing a bunch of money. A bunch of these are going to go bankrupt. So I don't know where this thing's going. It could go to zero. Who knows? Because there's not enough history for me to really chart this. Probably lower, I guess. I don't know. No, I wouldn't take a position on it just because I can't. I don't know where it's going, but I would say lower if I had to guess. How much time do I spend trading each day? Well, I'm always looking at the markets a lot. The thing is, I look at charts so much. I've got them in my head. That's why, I brought up the Walmart. I know what that chart looks like. I know how I've charted that. So I look at charts a lot. But again, it's kind of just part of the game, It's just being on point. That's why, follow my channel, watch, I'll point out the trade ideas. You don't have to look at charts and all the time, all the time. But I don't mind doing it. Okay. All right, BA and FDX. I'm just going to do one of those, and I think BA is going lower, but I'm going to do FDX because I don't think I've looked at that one. Okay, FDX, bullish falling wedge pattern for sure. I'm looking, I would be looking for a break to the upside, but again, that doesn't mean we can't head lower down to the bottom of the wedge. And there's a gap to fill right down here. Tiny little gap at 183.89. So we're probably going to go fill that gap. I would say maybe like that. Probably undercut, fill the gap, then recover and get a breakout, some sort of a bear market rally. I would look for that. That's all I have in the short term on this one, guys. All right. I'm just scanning through here. I think NOC, I already covered that one. Yep. AMD. Okay, AMD. I like that as a short. That's a short. Not the best, that's your best entry right there. And again, see the downtrend line? Resistance, hit it perfectly. Man, I didn't see this one. I wish I did. I would have taken it right up there. But there's your resistance right there. Boom, hit it, rejected. Going lower. No guarantees, but high probability. Target right now, 73.80. Good support there. And on this one, if you break below 73.80 or 73.50, again, not just by the penny, because likely what you'll get if you get down here is they're going to they'll do these little choppy things. The market makers like to dip it below and then recover it. Dip it below and recover it. They're running stops. All right. That's what the algos and the market makers do. But if you get below it, nice impulsive breakdown from there, you should flush right down to 58. We'll just call it 59. There's a thin zone right there. I've talked about that for a while. There's no trading in that whole, there's barely any trading in this range here. So to me, you get down, you should flush right through there and get down to that lower target. So that would be a good area of support, 59, and you probably get a minor bounce here at 70, 73.80, 74. Should go lower, guys. All right. I covered some gold stuff. We need to see confirmation on the gold candles. I like it though. I like it as of Friday. We'll see if that changes. But I'm pretty heavy in some of these miners, so I've been building positions in those for a little while now. Nvidia and Netflix. Well, AMD is like Nvidia, so it's probably going lower. Netflix, I don't think there's a whole lot of downside left on Netflix, but that doesn't mean it's going to go up either. It might just be dead money for a little while. I've pointed out those levels on Netflix. But until we see a broad market rally, then Netflix isn't going to go fill that gap or do any of that price action that I talked about. So, we just have to let that one go for right now. Maybe I'll be on it if we get a rally and get that move that I was looking for. I'll let you guys know. Things change from day to day, so we have to be fluid. Nvidia should go lower. Definitely not as good of a chart as that AMD one, but I probably down here, 128. And then again for Nvidia, the bull market, this thing could go way down here. Here's your bull market going back to 1999. So 22 years of bull market. Sorry, wrong tool. So we should head down there. All right, that's where I think we're going in the long term. All right, this move down should get us down here. I don't know when and where, but that's where I would think we'd get down to. So I think there's a lot of downside left in Nvidia. That's the thing. The retail and like CNBC and Kramer and all that, they get like little pullbacks like this, and they're like, okay, this sold off enough. And it's time to buy. That's because Kramer, for the most part, only works in a bull market for the most part. He just tells you to buy because he's basically like he tells you to either buy or sell, but not how to make money on when things go on the downside. So he's only there for investors basically, and so in a bear market, Kramer is not going to perform well for you. Yeah, he might keep you out of some losses, but from what I've seen, he only tells you to sell after things have really taken a bath, and then he's like, okay, there's going to be more pain. We got to get out. And then you just have to sit out and sit in cash while things collapse. But he's not going to help you with that. But I do know that after this thing sells off, he'll tell you to start buying because that's basically all that he can do. KHC, guys, I let that one go for, that one. Okay, so you're at support. This is a weekly chart, but there's support right there at 35.40, 35.50. Let's go to the daily here. Okay, so look, that was former resistance. That's that gap down. It was resistance all through here. It's now support. They undercut it a little bit, so you got to just be ready for that. But look, as I zoom in, that's kind of nice. You undercut it and then recover. All right, so I don't know. It is support. We could hold here and rally. I've been continuing to look for this gap fill all the way up here at 38. That's a big gap fill. I think it will fill. Maybe it's going to do it now. And then the other thing that I've noticed, that I'm just noticing now, higher lows. See that? And here's a recent low, higher lows. It's in an uptrend. All right. Yeah, so if I had to go one way or the other, I'd want to be long on this thing, but it's been a little tricky for sure. But I would want to be long down here for a move up to 38 to gap fill, okay? All right, moving on. All right, I'm going to go just for a few more minutes, guys, and then I'm going to wrap up. No, GMA looks like a short to me, but I can't get shares through my broker. I've looked for the last few weeks. GME's not a long, at least in my opinion. Here's GME. They don't have any shares for me to short, so it's been pretty annoying because there was a really nice short the other day when we were at the 200-day. But look, here's your downtrend line, GME. Okay, it's in a downtrend. Recently, they rallied it right to the 200-day, And I wanted to short it right there because I didn't even care if it went up and hit the trend line. It's close enough. The sellers typically step in early. And they have so far. So, yeah, I would want to short this thing. Yeah. I'd want to short it. Divergences tell me, look, you have a rally here in the momentum and you have a rally in price. It's not divergence. It's just momentum and price moving in the same direction. For us to find trades, we need to see divergence. We want to see momentum moving in the opposite direction of price. That tells us, okay, we're going to reverse. We're going to catch that reversal trade and, catch the big move. But, yeah, I think you fail here and probably head down. This thing could collapse. It has no business being where it's at. And, but $40-ish right in there. 40 to 45, we'll call it. All right. Sorry if I skipped you guys. I do try to get to most, but it's impossible for me to get to everybody. IBM. All right, so IBM weekly chart. Let me adjust this a little bit. I've got a asymmetrical triangle, which is an indecision pattern, so it can break either way, up or down. And still within that triangle on the weekly. If you go to the daily, you can see we just kind of hit the top of it, so we're probably heading down to the bottom. Right now, that's going to be down 117 or 118, and you'll probably hold there. But that's all I got for right now on IBM. Negative divergence as well. So again, see that on IBM? Okay, that's a divergent high. We should head down there. Okay, moving on. Adobe, AB, is that ABE? ADE, which one is it? I forget. You got to give me the symbol. I don't remember off the top of my head. I covered Target already. Yeah, I'm looking for more shorts right now. PANW is one of my favorite, but I'm sure there's a lot out there. CMCSA, is that Comcast? CMCSA or CMCSA, Comcast. Not my favorite chart, but I would say maybe something like that on the weekly. And we probably, look at that. I didn't even look at this little data point. I was actually kind of zeroing in on this one and then this cluster kind of down here. But weekly sell signal, back test, rollover, bear market. Okay. Looking at the daily. Let me get rid of this really quick. Right about there, I think. That's probably your target, at least in the short term, $30, 30, 31. Sell the rip, but it's bear market, just got rejected. So yeah, lower. Tesla. I took a position on Tesla on Friday. I re-shorted Tesla on Friday. I know they came out with some after hours like stock split pump, which is ridiculous because it literally doesn't change the value of the company. I don't think the stock split pump is going to work. because they, for one, that was all stuff that was working during kind of 2020 mania, buy everything, it doesn't matter. We're not in that phase anymore. I think we're in like that momentum's gone. So for me, 450, right? Or sorry, 550 is the level. We're kind of closed right at support, so it could bounce again here, but we'll probably just idle out before the Fed and then maybe crash after the Fed. I don't really know. I just know, for one, we're near support, about 700 area, and then we are, and then the next level of support's about 550. So I think we're going lower, but we could bounce a little bit here. I bet we're going lower. That's where I put my money. So all right, Uber. All right, we have a downward price channel. We're below it. We got rejected. This is another one of those stocks that really just came public in the last couple of years, so we don't have a whole lot of history. So I don't know where this thing's going, to be honest. There's just not enough history, so I can't really give an opinion. As a trade, I just can't see a level. As an investment, you got to do your other research. Maybe you like the company. I don't know. But as a trade, I wouldn't take a position on it. Okay, I did cover Upstart already, guys, so you can go back and watch that. Barrick Gold, I'm long Barrick Gold. It's actually my largest gold mining position. I like it. I like the larger ones better because they're not as volatile. So I can take a larger position, but that's my largest position for mining stocks, at least. And Barrick Gold has a bullish engulfing candle, so it's the same as gold. I've covered gold already. ABBV. Okay, let's look at that one. This is a healthcare stock, or pharmaceutical, but yeah, basically healthcare. Yeah, guys, I think we're heading down to this area. You've got a lot of support down there. So look, you've got horizontal support here at about 137.87. You've got the 200-day moving average creeping up here, and you have this trend line here, 1, 2, 3. So there's a ton of support right down in this area. So I suspect you get down there, you're probably going to get a bounce. All right. So I wouldn't want to short. If you get down in this area, I wouldn't want to short down here, but I would want to, and you could maybe go long. If you break the trend line and you break all these support areas, then down she goes, down to the major trend line, which would be way down here at about 78, $80, something like that. That's all I have on that one. This one was a trade idea, a short trade idea. I have it circled. It was right here. The sell signal came on April 13th. And, if you've stuck with it, it's been lower. It's been trending lower. So we should go a little bit lower. All right. 2 more, and then I got to wrap up and get going, guys. Which ones would you guys like me to cover? Redfin, that might be interesting. Although I know it's already sold off quite a bit. Adobe. Let's look at Adobe. ADBE. Because I know if I remember right, there was something kind of interesting about this one. Yeah. So this is what I like about Adobe. It's entering a bear market. This is 2011. There's your bull market on the weekly. All right. Sell signal came basically right there, the week of March 7th, and back tested for a few weeks. Down she goes. Okay. You had some horizontal support here at 423 and pretty much failed right there. Let's go to the daily. So there's your horizontal support, and they popped it above it just for a few days or a week or whatever, gapping down. That's another sell signal in my book on Friday. This gap down failing back below the support. This was a bull trap, all right? and gapping down, selling off impulsively. That's another sell signal. Now it's already down 7.5%. So, you know, if you got it Friday morning, great. Otherwise, you know, to me, it's going lower. All right. Where's it go? Here's your pre-COVID highs on this one. Got to take that out, but yeah. So, you know, it's close enough. I would wait for it to take out that 385. But if it takes that out, should head down there. It looks like decent support. You got a little reaction here, so we'll mark that out. And then you've got another nice area right here. That's good support right there for sure. Right there would be my final target, 261-ish, maybe 262. I like that as a level. Look, resistance, support, support, support. Okay, and then even right in there, resistance, resistance. Lots of reactions. That's my favorite level. Okay, so you probably do something like this. Lower, maybe bounce. All right, and that would be my final target. For now, at least. Could be going a lot lower. If we're entering a bear market, this might last years, guys. So, you know, but I'm just trying to point out maybe the first leg down, I guess, in an ongoing bear market. All right, Neo, lower. This is one of those mania hype stocks. You did have bullish divergence on the PPO right there, but you got a rally out of it. I think you're going to fill these gaps. All right, that would be my target for right now. 933 and 801. I think that's where you're going. You're in a downtrend. All right, it's a clear downtrend. Yeah, popped up. Yeah, see, I can't. That's not a trend because I only have 2 data points. So I can't quite make that as a trend. Maybe something like that. Okay, so I think you go fill these gaps. Then you might see a substantial bear market rally. We'll have to just see how the market is trading. But as of right now, I don't see any signs telling me it's, you know, not going lower. One more, and then I got to wrap up, guys. All right, what do you guys want? Redfin, or do you want what Ulta might be interesting, or what would you guys like? Stop sneezing. Sorry, guys. I have a chronic cough. I don't know where it came from. Which one would you like? And actually, I'm starting to feel a little funny. My kid's been sick for the last few days, and he's been home from school. And I've been having to, you know, do the bedtime routine and all that, so maybe I got something. I don't know. One more, and then I've got to wrap up. Hopefully you guys are finding value from this. You know, I think just in this live stream, we've got a couple interesting trade ideas. For me, the ones that I really like, PANW, I really like that. It just triggered on Friday. AMD looks good, although not the best entry point. So maybe if you get a rally, but I don't know if you're going to get that rally. But that looks good for more downside. And yeah, we could cover AVGO. I like that one because that one actually is a good setup. All right, there's a sell signal, guys. I like this one. So here's the reason why I like AVGO, because for one, it hasn't sold off that much. From the highs down to where it's at now, it's down about 20%. But a lot of these other stocks have sold off a lot more. So these might just be starting. That's why I like it the most, because I think there's more opportunity in this one. So on this one, I've got this uptrend line here. And you can see we broke, kind of chopped through it a little bit, but we are breaking. Closing on support on Friday, 542, 543, we'll call it. And we're just below it. So any more downside from here, and you're going to break that support, you should head right down to 511, or we'll call it 511.75. And decent support down there at, once you break 511.75, 491. And then down here, 419. So those are the levels to watch. From my perspective, no real negative divergence. This has definitely been one of the stronger semiconductors. So, hey, thanks, Steve. I appreciate that. Hopefully I got all your stock picks and everything. Thank you. And again, guys, if you guys are making money on my trades, all I really ask for is a thumbs up. Maybe tell people about, I just help encourage the channel, in any way you can. But it's I don't mind doing it. And the one thing I would ask is, if you haven't taken the course, I think it makes sense to take that course. All right. That does help me, but at the same time, it's going to help you as well. At least from my perspective, that's going to help increase your knowledge base. That's going to help you see trades for yourself. Maybe on these live streams, you can bring good trade setups to the group, because you're using the what's taught in the course to find those. And so bring those to the group. We can all take advantage of it. I'm only one person, and I can only find what I can find. I'm constantly searching and looking for stuff, and we don't need to find all the trades. We just need to find good trades that work to make money. But take the course if you haven't done so. So the link is in the description below. Check that out. And that is really all I got, guys, for today. So hopefully everyone has a great weekend, and I will catch you guys on Monday. Take care.